All right, guys, so we are here to do a recap for the trades that we did in May. May was a pretty good month. You can see here on the chart, this line represents the beginning of the month, and we had a big sell-off right through maybe the midway point of May, and then we had a little bit of a recovery as we closed into June. So a lot of my trades were done here in the first 2 weeks, and most of the profits that I took were to the downside, not surprisingly, and I took a couple of losses on some of the long trades that I had done. But for the most part, I would say it was a pretty successful month. So if we take a look at the trade metrics here, I did a total of 108 trades, so pretty active. My total P&L here, I made about $82,000 on about $580,000 that I put at risk, representing about a 14% return for the month. Not terrible, I'll definitely take that. My total profitable trades were 87 trades, and then I had 21 trades that were unprofitable. So you can see my percent profitable is 81% versus my percent unprofitable is 19%. In all, total profits was about $195,000, and my total losses was about $113,000. So that's how you get to the P&L of 82. And my profit ratio, which is my gains versus my losses, was a 1.7. I'm trying to get that number. I really want that number to be north of 2-to-1. Possibly even 3-to-1. So I'm going to have to maybe be a little bit more choosy on the types of trades that I'm doing, and I also may have to be a little bit more liberal on my stop losses if a trade is not working out. So something to work on. My maximum gain for the month was about $1,200. My maximum loss was $22,000. You can see here I'm risking about $5,000 per trade, and I'm making just under $800 per trade. So all in all, pretty decent metrics. Definitely some work to do, but we'll get there. So here's the May return. So the Qs, which the ETF, the Qs, which represents the NASDAQ 100, that was down 1.5% for the month. The SPYs, which represent the S&P 500, that was up 0.2%, as were the small caps. So there's the small cap ETF, Russell, up 0.2%, and here's our return at 14% for the month. So definitely outperformed the market. This is our profit by strategy for the month. So you can see here my long puts, my bear put verticals made the most money. I did about almost $65,000 in long puts, and that was obviously towards the beginning part of the month. I went in there with a pretty decent downward bias, and I was able to take a lot of profits as the market was coming down. Bear put verticals, again, taking profits as the market came down. I made about $16,000 in straddles, and so my bear call spread, which is a downward trade, just collecting the spread, that gave us almost $13,000 for the month, which is good. I did that one iron condor on Pfizer. I thought that was a pretty nifty trade. I think the implied volatility was something like 95%, indicating maybe like a 6% move in the stock, and it was a day before they were reporting earnings, and it just seemed like an aggressive expectation of a move for a company that really never moves 6% even after earnings. So I did that iron condor. It worked out. This calendar put spread, I lost some money on these calendars and the diagonals. These were bullish bets, didn't work out. These bullish put spreads didn't work out. Again, it was rough to have upward bias in this type of market, at least in May. So all the losses that I took were to the upside bias, but I need them in there to kind of keep the portfolio balanced, because I'm not entirely sure where the bottom is. I don't know when we're going to turn, so I just try to keep a neutral stance, and I try to minimize my downside risk here. Bull call verticals, and then long calls, I lost money here. So definitely weighted. You can see here all the money made was to the downside, and then the money lost was to the upside. Here is a breakdown of the type of strategies that I use. So 23% of the trades was long puts, 22% was bear put verticals, 26% was bull call verticals, 7% were long calls, 7% were straddles, and then 8% were bear call spreads, and the rest, very marginal. The iron condors, the calendars, the diagonals, all that stuff. So you can see it was heavily weighted towards the bull call vertical, the bear put vertical, long puts, and I had some long calls in there. So this is the cumulative rating, so metrics. So I started recording the Alpha Radar at the beginning of April, just to document everything. So this is everything since I started recording. This is, so April 1st, or whenever the first day of trading was for April. So I did 176 trades in total. My P&L, $141,000 over the last 2 months. That was my total risk taken for this amount of money. My average risk taken per month was about $510,000. So if I take the average risk and then my cumulative P&L, gives me a return about 27%. Again, this is an average, so we'll call it somewhere in that ballpark. 142 profitable trades, 33 unprofitable trades, 81% profitable, almost 20% unprofitable. Total profits of $321,000, total losses of $180,000, and my cumulative profit loss ratio is 1.8 times. Again, got to work on getting that north of 2 and maybe even closer to 3. So I do have some work to do there. Here's my max profit, my max loss. It's the $12,000 max profit, $22,000 max loss. You can see here my average risk per trade since we started doing this is about $6,000 per trade, and I'm making about $800 per trade. So that seems to be working out. And that's basically it for the recap. I will be doing another video later today because I did go ahead and I put some trades on earlier. The market was rallying, then it sold off, seems to be coming back now, so we'll see how we're faring. Thank you.